and welcome to another episode of the AI Cash Grain podcast. I'm Satish Nandapurkar, Director of Data Driven Strategies at Quantum Hedging. Today is July 26th. And in today's episode, first we'll go to Cy Monley, who's going to talk a bit about the corn and soybean market, what happened this week, and what traders are looking for. Weird week. We had a nice Monday, nice start, and then not such a great Friday. But corn did close up 5 cents to 410. Beans did close up 12 cents to 1048. So Cy will take us through that and what the dynamics are from the trader's perspective. Then we'll go to Kevin, who'll talk about the models. The corn model has flipped a little bit. We were moderately bullish last week. Now we're a little bit moderately bearish this week after going up 5 cents. Kevin will talk a little bit about that. I'll also talk a little bit about that. And then Kevin will talk about soybeans. Soybeans is moderately bearish going forward. As for recommendations, with both corn and soybeans, we're recommending holding as of today. Don't do anything on the Monday open. We're a little bit oversold in corn. We're on our benchmark in beans. However, Wednesday is the end of the month. So we will be sending out an alert either Tuesday night or Wednesday morning to sell on the Wednesday close. We'll be probably very likely selling either recommending 10% or a 15% sell in both corn and beans on the Wednesday close. I'll talk more about that in the recommendation section. But first, let me turn it over to Cy. Cy, what's going on here? The market doesn't seem to know where it wants to go this week.
Thanks, Satish. It kind of feels like Groundhog's Day here as markets are caught in just a slow grind sideways, it feels like. The interesting part this early in the week was there was some hot and dry popping up, and I think the market got kind of excited early in the week, both for corn and beans. And then it looks like, all right, that's only going to last for 3 or 4 days. So the market takes the risk premium away. And I think that's going to be the theme here for the next couple of weeks. And if the market starts to realize, wow, these yields are 180 to 183 in corn, and you start looking at a 51, 52 yield in beans, well, we're gonna go down and find where this demand is at. And then the farmer is going to be stuck holding a lot of corn from last year, a lot of beans from last year, and a lot of grain from this year. So it's going to be an interesting time here for the next couple of weeks. If we don't get the weather scare, what's the function of the market? The function of the market's going to find that demand. And I think that's where we're at, is just a slow grind lower until some fundamental news change. Now, Kevin, I'm curious, do our models pick up on anything special, or are we still in a slow grind like kind of feels like?
Hey, thanks, Cy. This week was a really quite volatile week in the markets. If we think about where our models were last week and where the market was last week, last week on corn, we closed the week at 405. Our model was slightly bullish, modestly bullish, you might call it, up to about 420, and this week's high was about 423. So we did see some interweek movement that kind of supported that. Overall, though, our model continues to kind of suggest, long-term kind of negative as we move into, the last part of the growing season and into harvest. Harvest prices right now looking to be somewhere in the 385 range. Just to kind of refresh our memory, we did have at the end of June, a corn market that was at 421, and our forecast was 403 to be hit sometime by the end of July, and we did hit that 403 mark back on an intraday trade at July 12th. So, I don't see a ton of things that are really going to change the paradigm as we, kind of close out the last part of the growing season here. Our range of expectations continues to be contracting as less and less, things can kind of shift the paradigm. We do have, as we turn the calendar into August, we'll get some new production information as USDA gives us a yield forecast. And, the USDA's, Pro Farmer will also follow up the next week after USDA with their Pro Farmer crop tour. But, everything we're seeing in terms of yield expectations, whether from other analysts or from some internal yield models we run, suggests something around that 181 mark that USDA has as a record high. So again, probably not much here that we want to suggest is going to change our outlook. Overall, looking at end of month forecast here for the balance of the growing season, end of July, which is really next week, somewhere around where we're at today. Not a huge probability of a big directional move here one way or the other. And then as we get into, late August and September and October, that's when we start to see prices potentially slip into the high $3 range. And, probabilities are still pretty good that will close below $4 at some point, in the next, call it 60 days. So, not a lot here that we can really suggest leads us to a lot of upside potential. Soybeans, on the other hand, soybeans this week were really volatile, trading quite high, but closing 30 cents down on the week, or 30 cents down on Friday's trade. Last week we did meet the 1036 mark, and we continue to see not a lot of upside here, but they're starting to see a little bit more bullish story here on beans with some potential to maybe get us back to $11. But we'll see how the model performs in the coming weeks. So right now it's mostly flat for beans with a little bit of upside, but again, nothing that's probably going to change the overall paradigm and the outlook that we've had. In terms of price probabilities, 1046 is the end of July forecast, and progressively getting higher from there, with an outside chance of maybe getting to $11. So that's something we'll keep watching as we continue to run these models.
Thanks, Kevin. And before I go into the actual recommendations for this week, I'm going to talk about one of the features. I mentioned earlier that last week our model was a little bullish on corn. We actually did go up a little bit. Now we're a little bearish on corn. And I want to tell you what's kind of driving that. Why is the model moving around? The biggest feature in our model, a little bit of a peek under the hood, is the wheat corn price ratio. That is what we're finding here at the end of July has probably the biggest impact on where we're going to be later in the year in October. In fact, from July 26th to October 30th, the level of the wheat corn price ratio is highly correlated to what we do from July 26th till the end of October. In fact, it's correlated at a level of 0.52, positive 0.52. That's a very strong correlation. That's a pretty strong correlation. That's basically saying if right now wheat corn price ratio is high, wheat is trading relatively high to corn, corn is likely to rally. If wheat is trading low, corn is likely to fall. So what we're seeing is right about now, wheat is going to lead and corn is going to follow. That's what the data is telling us, at least, that wheat is going to lead and corn is going to follow. Now, what happened last week? The wheat corn price ratio was 1.41, right? Then this week, wheat fell 20 cents, corn went up 5 cents. So now the wheat corn price ratio is 1.34. So we've gone a little bit lower. So last week, we were kind of in a no man's range. We were kind of up here at 1.41. Notice when the wheat corn price ratio on July 26 is greater than 1.5, we've gone up every single time. The market has gone up. Corn prices have gone up every single time from the end of July to the end of October, right? 8 times it's gone up. And wheat has pulled corn up. But when wheat prices are a little lower, less than 1.4, the market has gone down, a lot more than it's gone up. So last week, we were sitting at 1.41. So a little bit in no man's territory, but we were sitting a little bit higher. Wheat went down, corn went up a little bit. Now the ratio is 1.34, which is a little bit bearish. And that's why our models have gone from kind of moderately bullish last week to moderately bearish, because the data, the historic data, is telling us kind of where wheat goes up to now, corn follows. And that's what you're seeing. And as for recommendations, as I always say, our goal with our cash grain service is to beat the benchmark, which is the typical producer cash sale index, which sells a predetermined amount of bushels, percentage of bushels each month end from January through October. So we're about to hit a month end here on Wednesday for July. The index and the benchmark will be selling 15% in corn, 15% in beans. So we'll be looking at our model. We're a little oversold in corn. We are even with the benchmark in beans at this current time. So we'll be looking at the model and deciding whether we want to stay oversold or be undersold on Wednesday. And as I said, that'll be coming out on Wednesday. Here's where we are with corn. We are 10% oversold. We have a better average price. We're about 7 cents better on average price, 465.60 versus 458 for the benchmark. The benchmark is undersold. And so if we stay down here at the 410-ish level, the benchmark's going to fall even further behind from where we are. So we're going to end up tracking much better after Wednesday against that benchmark. Now, with respect to beans, we're even, but we were oversold for a little while, and that was good timing because beans dropped in price right while we were oversold. Currently, we're 40% sold. The index is 40% sold. The index will also be selling 15% on Wednesday. We're a little bullish on beans, so we may sell only 10%, or depending on what the model says on Tuesday, we may sell 15% or more. If the model turns bearish, maybe we'll sell a little bit more than the index. But right now we're even, and we're tracking ahead. Our average price is 11.68. The benchmark is at 11.56, and that's because we got oversold just at the right time before the big drop. We evened it out, unfortunately, before the second drop, but we're data driven. We stick to what the models tell us to do. So let's just do a summary and recap here. First, we went to Cy, who talked a little bit about the action in corn and soybeans. Both were up a little bit this week, but Cy, and from the trader perspective, summarizing what he's hearing from the trader perspective is, you're seeing good weather out there and good crop conditions, and producers have a lot of grain to sell. They've got grain in the bin. They've got a lot of grain to sell. And with that overhang and with the good weather, the traders just don't think that we have much upside. With beans, similar, good weather, and supply is trying to find demand. There's just a lack of demand out there, so he doesn't see it going up in beans. The trader's a little bit bearish. The models agree. On the corn side, the models have turned moderately bearish. On the bean side, though, the models disagree with the traders. The beans are seeing data that the bean model is seeing data that makes the beans a little bit bullish, just moderately bullish through August and the end of September. And as I said, when it comes to the recommendations, as of right now, nothing to do on the Monday morning open. We're a little bit oversold in corn. We're on target on the benchmark in beans. However, the month end is the Wednesday close. We absolutely will be sending out something Tuesday night as an alert, and probably reiterated on Wednesday morning to sell some of your grain at the Wednesday close. If I look at, my guess is going to be that we're probably going to sell 10% to 15% in corn is the recommendation. And the recommendation is probably going to be 10 to 15% in beans. The benchmark is going to sell 15%. So based on where the models are right now, that's likely going to be the recommendation. So keep an eye out for that. Again, there will be an action to take on the Wednesday close. So again, thank you for being a subscriber. We look forward to seeing you on another episode of the AI Cash Grain podcast. Look out for the alert on Tuesday night and Wednesday morning. Thank you.